You almost have to laugh at this. The market makers said, yep, nope, we're done with that, Nvidia, and sold off the stock 6%. Get this, Nvidia is trading like a penny stock. The stock is down over $100 today from its high of $974. Currently trading at $869 per share. Here in this video, we're going to go over what is happening today, why the markets are flash crashing, and of course, all of your Tesla stock news and updates for the day today. On that note, I think it's important to point out that Tesla stock is outperforming big time compared to Nvidia and other names. To some degree, if you do see a sell-off in your AI stocks, maybe that does lead more money to go back into Tesla stock, and we'll talk about that throughout this video as well. First up, let's just be honest, we don't control jack crap in our markets. Algorithms, quantum trading funds and programs, they control what stocks do. There is no specific news today that is causing stocks to sell off to this degree. There's a lot of smaller pieces of news that collectively could be having an effect on our markets, but this was really the market makers, the algos, the quants saying, yep, we're done with this bullishness that we have seen in AI stocks in 2024. And this could actually start a larger, longer term downtrend, which could ultimately turn out to be a positive for Tesla stock. But let's get started with some of your many events today that could have caused the markets to fall. But I'll be honest, none of these events by themselves justify Nvidia falling $100 today, justify the NASDAQ being up almost 1%, now down about 1.5% at the time of recording this video. This is volatility on the likes that you have not seen in years. I mean, this reminds me of 2022, where you would be up 1% and end up closing down 2%, or be up 2%, end up closing down 1%. It was a very big shift from the bullishness, the just absolute FOMO you were seeing in the beginning of the day today, and I think that's why what you're seeing today is so notable. This was not just a random day that the markets decided to sell off. This was a very bullish day in the beginning, at the start of the day, that turned very sour. So first up, one reason why stocks could be selling off today is something that's actually not being covered at all on like CNBC, which you would think this would be like a top headliner story. Microsoft says that Russian state-sponsored hackers are trying to breach its systems again. They're using things like password sprayers, trying to get into different areas of Microsoft's business. So far, Microsoft says they have been unsuccessful, but I mean, for a $3 trillion company, if they were to be hacked, how much damage could that do? I would argue a lot. So does that make sense why stocks could be falling today? In theory, it does. But then again, when you look at Microsoft stock, it's not moving at all. It's down about 1%. It's doing better than the NASDAQ, doing better than any of your AI stocks. So although I've heard some people say this could be a reason why markets are down, I don't think it's having much of an impact as of right now. But if these Russian hackers are successful, it could cause, well, a lot of carnage in the markets, that's for sure. The more obvious reason why stocks are selling off today is Marvell is down 11.2% today after missing on their earnings. They kind of came in line with their earnings. They missed on guidance. So Marvell is down big time. That is deemed as one of your AI stocks. You also have Avgo, that is Broadcom's, really seen as like number 2 to Nvidia alongside of like an AMD. Broadcom, they kind of came in line with estimates. Their guidance was in line with estimates as well, but the stock has went up so much. Broadcom is down about 6.5% today, but you also have ARM down 6%. You have AMD, which was doing very, very well today. AMC seen a big switcheroo today. AMD is even down about 2.3%. Most of what you're seeing in the markets today is really your AI stocks just throwing up. Now, there's a couple specific reasons why this is happening today. First and foremost, these AI stocks have been huge gainers, and they've done very well in 2024. You are overdue for a pullback and a correction in this area of the markets. I don't think there's any arguing here that Nvidia at almost $1,000 per share is pricing in a lot of future growth. It's priced for perfection. It's almost the most valuable company in the world before this drop that you've seen today. That can only go for so long. That is purely FOMO. That is purely hype. The stock got disconnected with fundamentals. Is the stock disconnected with fundamentals at $872 per share? Maybe, maybe not. I mean, you would have to see everything go perfect for years just to justify the valuation of Nvidia today. So there's probably still more room to fall here. I think another reason why AI stocks are falling, thus having this really negative impact on the broader markets today, is something that you're not going to hear a lot of people talk about, but it's the SoftBank ARM lockup period that will be expiring on March 12th. Now, let me just kind of put this into perspective for you. SoftBank owns 90.5% of ARM. Now, that's about 929.7 million shares of ARM. So today there's only about 94 million shares that have been trading hands. There's been a lot of hype and a lot of demand for anything that is deemed AI, especially that has good earnings, which ARM had better than expected earnings. The stock went up. Now only 10% of the float's actually trading right now. But coming this upcoming Tuesday, so after this weekend, not Monday, but Tuesday, SoftBank will have the option to start selling their ARM position. Now, let's just put this into a little bit of context. Now, there's two things I like to look at when you're kind of thinking about a lockup period. Number one, it's how much of the flow, how many shares are actually eligible to be sold. In this case, if 94 million shares are trading hands today, about 9.5% of the float, I mean, you got 90% of the shares that could trade hands. Question is, does SoftBank sell a lot of shares or a little bit of shares? Here's where context makes sense. And you really have to say this with a bit of context. ARM has seen average trading volume every day around 15 million shares. Now, if SoftBank owns 929.7 million shares, if ARM were to sell 1% of their position on March 12th, which it could be more than that, but if they were to sell 1%, it would be about 9.3 million shares. If you have an average trading volume of 15 million shares a day, imagine if you had 9.3 million shares that were sold on any given day. That would be a lot of selling pressure. That would, at least in my opinion, drop ARM 10%. Could it be more than that? Yes, and that's just if SoftBank sold 1% of their position. They could sell 1% of their position for multiple days in a row. Now, think about it like this, to put it into a little bit more context. If 94 million shares are currently trading hands, and SoftBank sells 1% of their position, and that's 9.3 million shares, that would be about 10% dilution based on the current float that is trading hands. So roughly could give the stock about a 10% fall. If you want to get even more conservative, which I think this is too conservative, and you could say SoftBank might sell half of 1% of their position every single day. That's still about 4.5 million shares that would be dumped on the markets. That would still roughly add about 5% dilution to the float of ARM, at least causing a 5 to maybe 10% pullback in the stock. No matter which way you want to do the math here, if SoftBank sells, there's going to be downside in ARM. Now, is SoftBank going to sell? Well, SoftBank's founder, Mitsubishi Son, he wants to create a $100 billion chip venture to rival Nvidia. Where are they going to get that capital from? Probably a lot of it is going to come from ARM. Now, SoftBank's ARM position, if we do some simple math here, and we take 929.7 million shares that SoftBank owns, times that by $134, which is ARM's current stock price after this drop you're seeing today, that is valued at about $124.5 billion. The entire company value of SoftBank is $85.89 billion. So yeah, they're gonna sell a lot. Okay, that's never going to end well if you make an investment and that investment becomes more valuable than your entire company's value. Okay, that's never going to be good. Now, SoftBank was unprofitable for a while, and they just swung back to profitability. WeWork was their biggest bet before ARM, and that just went bankrupt back in November. It could cost SoftBank around $14 billion. So, long story short, SoftBank not doing that well. If you look at SoftBank's stock, it peaked out about $50 back in 2021. Today it's $30, and before ARM really did well, the stock was like $20 per share. So just judging off, the share price of the stock and all these other factors, they're going to sell. That could put some pressure on ARM. The markets like to kind of figure out or kind of price in what that could do to semiconductors. And when this market is, let's be honest, 80, 85, 90, 95% of the markets, the volume on any given day is algorithms or, quants, whatever word you want to put, market makers that are actually doing the trading. Well, if they're going to price in selling of ARM stock, that likely means Nvidia, Marvell, Broadcom, Intel, Dell, AMD, ASML, Taiwan Semiconductors. Likely all of those stocks get sold off next week also. So what you are seeing today could likely be some of that getting priced into the markets. The other reason why you could be seeing the selling in markets is the jobs report that came out today. Initially, the markets loved it, but when you actually look under the surface, it's not nearly as strong as you would think. The non-farm payrolls came in at 275,000. The estimate was 200,000. That was a beat there. That shows the labor market is still on paper, at least right now, doing well. But maybe not, because if you consider last month, you had 357,000 job ads. That was revised down to 229,000 job ads. 120,000 jobs were revised away from last month. So the number last month, not nearly as strong as we thought, but it's probably the unemployment rate that is actually moving our markets quite a bit to the downside today. It was expected to come in at 3.7%. The unemployment rate actually came in at 3.9%. This is the highest level that you have seen in quite a while. This is the highest unemployment rate that you have been at since December of 2021. Well, actually, January of 2022, you were at 4% for a brief moment in time. That is when we had 2 declining quarters of GDP growth. You were in a technical recession at this moment in time. So you're back at the highest unemployment rate that you have seen in literally 2 years. Ultimately, the markets fear a recession more than anything else. Remember 2022? I hope most of you guys were investing during that moment of time, but stocks sold off not because the Fed was raising rates, but because the Fed raising rates implies that you're going to see a recession. And what happened? The Nasdaq sold off almost 40% in 2022. S&P was down like over 20% or so. Well, yeah, if it looks like we're heading into a recession again, the markets are not priced for that at all. And I have talked about this phenomenon before, whereas really over the last couple of years, bad economic data has been seen as good news because that means the Fed's not going to have to be as aggressive. Maybe we get rate cuts sooner. But eventually, if it looks like we're going into recession, bad economic data will start to be bad news for the markets. And it's possible that that started today. Now, there's another possible explanation, as everyone has been so bullish on Nvidia and on, some of these other AI stocks and even just the broader indexes heading into, right now and really over the next couple of months. There's been nobody that's really come out and be bearish at all on these stocks. Like, if you are an analyst and you're like downgrading Nvidia, you might not have a job, okay? Because everyone's so bullish on the stock, it's ridiculous. Well, I have a pretty simple explanation to what could also be happening today in the markets. You could have potentially just seen market makers, have to get some of these calls out the money. There is thousands of calls that were in the money in the high 900s. Keep in mind, Nvidia hit $970 or so, $974 in the beginning of the trading day today. Maybe they wanted to get some of those options out of the money considering today is Friday and they would have had to buy a ton of stock. A lot of this rally in Nvidia has been due to the options market. And yeah, it was only a matter of time before market makers had to kill some of those options and subsequently drop Nvidia's stock $100 in a single day. Now, in regards to Tesla, Tesla is down 1.64% or so today, which is down more than the NASDAQ. The NASDAQ is now down about 1.16%. There's still a little bit of time here until the end of the day. I have to start these videos before the end of the day, about 2 hours or so before the end of the day, just to get them out at 4 p.m. It takes roughly 2 hours to make a video, edit a video, upload a video, to have it ready to go at 4 p.m. And sometimes it's right on the wire when I actually get done at 4 p.m. But this could turn out to be a positive catalyst for Tesla stock. Why this could be a positive catalyst for Tesla stock is actually pretty straightforward and kind of more simple than I think a lot of people would like. What you've seen over the past couple of months, specifically the start of 2024, really December 28th was the high for Tesla stock, and Tesla stock was around 260. Ever since then, you have seen money running out of Tesla and into Nvidia, into other areas of the markets. People say, hey, I might still be bullish on Tesla for the long term, but with my trader mentality of, I'm not going to hold Tesla, I'm not going to buy the dip on Tesla, I'm just going to sell out of my Tesla and I'm going to go buy Nvidia because Nvidia is going to the moon. You can see that reflected in the market cap change. So Tesla has went from a $700+ billion company, $800 billion company at one point here, just not that long ago. Definitely in 2023, September-ish. And even, you were in the high 700s, 700 billion range for market cap, even back here to start 2024. And now Tesla stock is in the 500s for market cap, 500 or so billion dollars of market cap value. I think it's like 570, 580 or something. You've lost over $200 billion of market cap value. That's my point. And a lot of that has likely went into Nvidia and other AI stocks that are hot right now. Other areas of the markets, like small mid-cap stocks, they have also been, experiencing a lot of selling in 2024, and a lot of that money has likely also went into Nvidia. It's important to note that there has not been a lot of inflows at all into our markets in 2024. So when Nvidia goes from less than $1 trillion market cap to $2.4 trillion of market cap within the course of about 6 months or so, you haven't seen even close to that in terms of that dollar amount come into our markets. So that means that market cap gain has come from elsewhere, from other areas of the markets, and it's gotten pooled into Nvidia. Now, if your AI stocks specifically start to get a little bit of a breather here, maybe they go through a correction event, maybe there's further to fall for Nvidia, for ARM, for Broadcom, for Marvel, for Dell, for Intel, AMD, SMCL, TSMC, and some of the other names, then as long as the economy doesn't break, and it looks like we're heading into recession, as long as the Fed does not get super bearish, as long as nothing drastic changes from here, CPI also comes out next Tuesday, that is notable to mention, then I think you just get a rotation into other areas of the markets, which I could see benefiting Tesla stock probably the most out of any other stock out there. So that's how a correction in some of your AI stocks could be a positive for Tesla. Now, I think it's also pretty safe to say Tesla's sentiment is pretty washed out. Even some of the biggest, bulls on Tesla like Adam Jonas are completely capitulating, saying Tesla could potentially be unprofitable in 2024. That's a crazy assumption to make, considering Tesla had $4.3 billion of free cash flow and around $11 billion of profit last year, just as a total figure. To say Tesla could be unprofitable in 2024, I think that's kind of a stretch, right? And that just shows you how washed out and how bearish the sentiment has become in Tesla stock. Now, if we do continue to see a full-on correction event in the broader markets, the S&P and the NASDAQ, of course, this can take down Tesla stock further from here, but it doesn't necessarily have to. Keep in mind, you could see a sell-off in the NASDAQ and the S&P, and your average stock could actually be doing well. The Russell could be doing well if you do see big tech fall. I think today is that first kind of inning of a correction event. Yes, I will say I do think a correction is coming for our markets. So you're seeing a broad-based sell-off. But even take a look at the Russell today. I mean, you can't knock it, okay? Look at IWM. IWM is down 0.1%. The Russell is 5x outperforming the S&P today and 12x outperforming the NASDAQ. There is clearly more money going into the small caps, the Russell, than other areas of the markets. Now, once we get further into this correction event, I think you'll slowly start to see that redeployment of capital into Tesla, small caps, mid cap stocks, the stocks that have been beaten down in 2024. With that being said, I do think a potential sell-off in Tesla stock could drop the stock around 6% back to about $165 per share, but that would be roughly the extent of the downside I would expect here in Tesla stock, no matter what happens to the S&P or the NASDAQ. In kind of simplest terms, as long as nothing dramatic changes, right? With CPI, with the Fed, with the economy, if you just go through a typical correction because AI stocks have rallied too much, went too far, too quickly, I wouldn't expect a full-on crash in Tesla, considering Tesla's already down like 30% year to date. You've already seen the crash. Now, with the S&P, I expect a little bit less downside because S&P is not as tech kind of centric, although tech is by far the biggest weighting of the S&P. The NASDAQ is pretty much all tech, right? I would expect at least 490 on the S&P could be revisited over the next couple of weeks here. That would be roughly a 5% pullback, 5.5% pullback from the highs of the day you've seen today at about 518 on the S&P. Now, if things were to get a little bit worse from there, 7% would be the next level, around 475 I would be targeting. And kind of the worst case scenario I could see here, as long as nothing dramatically changed, or maybe things get a little bit worse, maybe CPI comes in a little bit hot next Tuesday, maybe the Fed starts speaking a little bit more aggressively, maybe the summary of economic projections on March 20th shows less rate cuts in 2024. I could see the S&P falling back to about 450, and that would be a pullback of about 11% from here. And I think that is when you would likely start buying some of your tech stocks, maybe some of your AI stocks back again. Now, I think something similar is likely for the NASDAQ, but maybe on a little bit larger of a degree. Your 50-day moving average here on the NASDAQ is at about 424. This is looking at the triple Qs. That would be downside of about 6% from the high of the day today that you've seen. Now, I think that happens regardless from here. When you really get a shift of momentum, that's powerful, okay? Nobody's going to argue with me, like I said in this video, that Nvidia is cheap here, that any of these AI stocks are cheap here. They are priced for massive growth with perfect numbers, right? If there's any kind of shade of doubt that things might not be as good as expected, well, these stocks could fall further. But either way, I think they're pretty overvalued right now. The concentration has got pretty extreme when you're an analyst and you're scared of talking negative about these stocks at all, just because, I mean, people are going to hate you. You might lose your job. That's a problem. And there's been reports of that actually starting to come out. Now, with the NASDAQ, I could see the NASDAQ falling a little bit more than the S&P, about 14%. This would put the triple Qs back to about 386. This would be slightly under your high, your previous all-time high you set back in 2021 and early 2022. Now, just to get back to that previous all-time high, that could be a drop of about 11% from here. And I think that could happen just from a sell-off in your overextended, overvalued big tech name. Now, with that being said, we will get into a little bit of your data today for Tesla stock. In the next video coming out at 8 p.m. tonight, we'll go over all of your specific Tesla stock news today, but I do think this was more important to cover, and I think more people are going to get more value right now based on the information that was provided here in this video. So I just think the timing made more sense to make the 8 p.m. video at 4 p.m. today and the 4 p.m. video at 8 p.m. later on tonight. You do not want to miss that video. We're going to specifically talk about that ARM lockup period coming next week, CPI, and how next week could really be an eventful week for our markets. Nonetheless, I'm sure you guessed it, over on StockTwits, Nvidia is the most trending stock out there. The most people are talking about Nvidia out of any other stock. Nvidia is currently down about 5%. People have flipped and now are extremely bearish with sentiment readings of 15. Again, that kind of momentum shift is powerful, and that's why I think Nvidia continues to fall from here. Then again, you don't have a lot of valuation support when the stock's $880 per share and it's run up so much. I mean, it's priced for perfection, and you got to look out to like 2026, 2027 earnings just to kind of value it with a fair value of the markets, and that's if everything goes well. And I don't think the markets are down for that as of right now. Maybe not for a while with Nvidia. I'm sure you probably guessed it as well. Sentiment for Tesla is negative, bearish today. Not as bearish as you're seeing with Nvidia. Sentiment for Tesla today is at 32, so about 2 times better than Nvidia, but still categorized as bearish. Yesterday it was at 68, which was bullish. Message volume is a little bit lower today, which is kind of surprising considering, you know, you're seeing another red day for Tesla. Yesterday, message volume was at 67. Today it's at 57, and the participation ratio today is at 55. So a decent amount of people talking about Tesla stock. Option activity from hedge funds and institutions in Tesla stock is pretty neutral, slightly positive today. You have seen 463 orders totaling $123 million with a positive order value of 52%. If you include retail in this, you have total call volume of 62.2% and total put volume of 37.8%. So almost 2 times as many calls that are being bought today than puts. But then again, the shorts are out again today with cost to borrow fees about 10%. That typically implies there's a lot of shorting activity that's taking place. I also want to point out at roughly the same time the market started to fall, gold, which doesn't normally move a lot, started to go basically straight up. So as the market started to fall, gold started to go basically vertical. That's kind of showing you there was a great bit of fear out there. Now, gold since sold off, it's starting to kind of reverse higher. Gold's still up almost 1% on the day, which is not exactly a great sign heading into the weekend. But more on that in the next video. Hit the like button, subscribe to the channel if you have not done so already. That's going to do it for this video. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. We do have some trades on ARM and some other semiconductors for next week's major event. And again, I will talk about that and show my positions around ARM in the next video, just for full transparency's sake. That's going to do it for this one. You guys have a great rest of your day. Go follow the X account. It is Michael Tyler over there. Pretty easy to find. And yeah, I think you'll like the value provided over there as well. Thank you for watching. Enjoy your weekends, and I will see you in the next one.